What's going on, everybody? It's Jeff here. Welcome back to the channel, The Controlled Squeeze. I see a lot of people talking about this all over the internet lately, and I think it was sparked by an article that was released yesterday. I'm going to break down that article very briefly for you and also talk about the three biggest factors that I see right now leading into the rest of this year and the start of the new year. But before we get into it, I've mentioned before in other videos that this event is going to be a managed event. And there's a few reasons for that. And it is because of what happened in January of last year. I'm talking about Robinhood deleting the buy button, market makers in a position where they don't have enough liquidity in order to be able to process everything that was happening, especially all the buy on the buy side, as well as the SEC having to turn a blind eye. They're only going to get away with that one time, okay? So that is why I do believe the price has been suppressed for so long in order to make sure the business processes are all lined up. But let's get into that article, and then I'm going to break down my three biggest factors I see right now. So this is one that was released by JP Morgan analyst, short squeeze likely into end of the year. Got a couple of things highlighted for you. Okay, for short selling campaigns to succeed, there has to be positioning, liquidity, and often systematic amplifiers of the sell off. We believe these conditions are not met, and hence this market episode may end up in a short squeeze and cyclical rally into year end in January. Remember that word, cyclical. One should note that large short positions likely need to be closed before the seasonally strong January, which is likely to see a small cap value and cyclical rally. And given that market liquidity is dwindling, the impact of closing shorts may be bigger than the impact of opening them when liquidity conditions were better. Now, let's take a look first at liquidity, okay? Naturally, a liquidity issue can happen when there is a result of a lack of cash and other assets when they're needed. And these crises can be triggered by large negative economic shocks or by normal cyclical changes in the economy. And I've mentioned to you before in previous videos, like we talked about, when it comes to the monetary policy changing, this is going to affect liquidity. That's the first issue. The second issue is we're getting down to year end, okay? And naturally, in these last few weeks of the year, there's a couple things that happen. One, big funds are going to rebalance their portfolios in order to please their investors, who are the ones that fund their portfolios. Also, you have big funds and even just retail like myself that might be holding negative positions that you are, red on, and the price isn't moving, and you're looking at potentially having to pay a big capital gain tax bill, and you're looking to offset some of those capital gains. And that's when you will see some of these heavy red positions get cut. That normally happens getting into the closest toward the end of the year. Naturally, I'll be looking at, I only have a couple positions that I'm still pretty red on, not gonna lie, okay, that I will be probably cutting either 1 or 2 days before the end of the year and hoping obviously there's gonna be a movement before that, but also trying to calculate everything as much as I can because I wanna pay the least amount of money to Uncle Sam as possible, okay? So those are the two of the other three big things happening. And the last thing, which I think is the most important, I'm gonna break it down for you, and I've mentioned it numerous times, is the market runs in cycles. Okay. And anybody who's been around in the stock market for at least, 5+ years always tends to look at what is going to be hot. What was hot last year? What's hot every year around this time frame? And if you've been following me for a while, even just recently, I mentioned in November the turkey crack run. Okay. It's that week of Thanksgiving where not just small cap stocks run, but low float small cap stocks run. They run hard. You can go on my channel, you go check out a video. I said we have 200% runners. I think this one was posted on like the 18th or 19th of November, talking about what was going to happen the week ahead. I even mentioned here on the Discord, which if you're not a part of the group, come check it out. We've got a bunch of experienced traders. It's absolutely awesome. This is small cap runner week, everyone. ISPC, which ran, we had APVO, KTTA, ISPC ran again. This is when BFRI ran, as well as LGVN. Can't forget that one. But this is when stocks run hard. And it's very natural, okay, for traders to always try to look ahead at what sector is going to be hot. Okay, what theme is going to be hot? We've also talked about, low flow IPOs that were hot. Okay, but naturally, that's exactly what experienced traders and big funds and asset managers will do as well. And we all know what is coming up. January. We all know what happened last January. Okay, and I have noticed, which I've mentioned to you guys before in other videos, we were talking about people that I saw that really were not a big AMC or GME participator are starting to talk about this stock. I even remembered mentioning this in a video when there was a little bit of turmoil going on inside the ape community, saying you have a lot of outsiders looking at these plays, but then they're also looking at the community, which, by the way, I think we've all come together in a much stronger manner lately. But I brought that up, and that's exactly what you're seeing happening right now. And I'm going to show you, this is just one tweet that came across my feed. Now, first of all, I do not follow this guy. All right, as you can see here, there are a couple other people in the community that do follow him. I know I mentioned other people on Twitter that I can validate for because I've been following for a long period of time. This is somebody I cannot, but it's natural on the internet when 1, 2, 3, 4, 5 people who have a fairly large following start talking about a theme or what they're looking at. It just spreads and it spreads and it spreads. And this is just one case that I happened to see today. And I was like, you know what? I need to mention it in my video, but I've seen this as of lately. And he wrote, GME and AMC will start running in exactly a month for 10 to 12 days. And the reason why he is saying this is not more specifically about what is going on when it comes to the potential financial crash, okay, liquidity requirements and so forth. It's all market cycles. You've heard me talk about it for a long time about anything, about so many other sectors besides obviously GameStop and AMC. But naturally, there's going to be a lot of people on the outside that are going to be interested in these plays. And they know that they ran before. Even when you look back at this article right here, need to be closed before seasonally strong January, small cap. January, small cap. They ran hard last year. Okay. We also mentioned sentimental plays. Okay. When you see one stock running really, really hard, you look at something that replicates it. That's why you see when AMC runs, obviously GameStop will go up. Maybe not exactly the same. Sometimes they are exactly the same pattern. All right. And you look at all of them because they run off sentiment. So those are the 3 biggest things that I see happening right now. Okay. And pay attention to when it comes to market cycles. There was a lot of strength on Friday, something that we haven't seen inside AMC in a long period of time, and a lot of volume, something we haven't seen in about 4 months. So guys, that's it for this video. I'll see you in the next one.